Now speaking, Sarah Penner, Investor Relations Manager. Erik Nordstrom began the call by introducing himself and the other participants on the call. He then gave a brief overview of the company's first quarter performance, including that sales grew in certain categories, such as digital sales, but suffered in other categories due to the COVID-19 pandemic. Erik highlighted that despite the challenges faced, the company is taking important steps to manage costs and position itself for future success. He also mentioned the company's strong balance sheet and liquidity, noting that it ended the quarter with $1.4 billion in cash and available borrowing capacity. Additionally, he discussed the company's efforts to capitalize on opportunities to differentiate its customer experience and maximize the benefits of technology and data. Lastly, he touched on the company's ongoing focus on elevating its brand, including the launch of new product collaborations to reach new customers. Now speaking, Erik Nordstrom, Chief Executive Officer. Nordstrom reported net sales of $3.1 billion, a loss per share of $1.27, and adjusted earnings per share of 7 cents for the first quarter. This was higher than last year's adjusted earnings despite lower sales due to progress made on priorities, such as improving Nordstrom Rack performance, increasing inventory productivity, and optimizing the supply chain. Customer demand has continued to be pressured from the macroeconomic backdrop, with the first quarter of 2022 benefiting from pent-up demand as the pandemic receded. Nordstrom remains focused on executing with agility. Nordstrom has seen improvements in the performance of Nordstrom Rack, with increased penetration of their top-performing strategic brands. 2 stores were opened during the quarter, with 6 more opened in May and 13 planned for later this year. Inventory levels are 8% lower than last year, with non-designer inventory down 11%. Variable supply chain costs fell by over 100 basis points, resulting in increased productivity throughout their network, reduced transportation costs, and faster delivery speeds to customers. New leaders have been hired to help advance Nordstrom's Closer to You strategy, including Kathy Smith as CFO and Jason Morris as Chief Technology and Information Officer. They have also added Atticus Tyson and Eric Sprunk to their board of directors, bringing expertise in retail, technology, cybersecurity, and operational excellence. Nordstrom believes their focus and execution will drive incremental improvement over the balance of the year and position them well to create long-term shareholder value. Now speaking, Pete Nordstrom, President and Chief Brand Officer. Erik discussed the progress currently being made against key priorities, and the following focuses on category performance and agile inventory management. Most categories had difficult comparisons to last year's double-digit growth due to pent-up demand coming out of the pandemic. Still, this quarter saw positive results in men's and women's active apparel and sneakers. Beauty and men's apparel performed above average, with men's dresswear continuing to do well. Strong partnerships with powerhouse brands like Nike and newer brands such as Vuori, On, and Hoka have been successful in helping customers discover new products. The toughest category was designer, which has seen a trend since last quarter. Inventory management saw more than 100 basis points of gross profit margin improvement in Q1. This was achieved by right-sizing unproductive regular price merchandise, primarily Nordstrom, soft-performing private brands product, lower price point items at Nordstrom Rack that did not resonate with customers, and designer where trends decelerated after pandemic strength. Additional markdowns were taken in the second half of 2022 to prioritize leaner inventory levels. In 2023, there is a focus on faster turns, with an increased penetration of strategic brands contributing to this goal. Private brands product was also the #1 volume driver at Nordstrom Rack, and designer sales remained above pre-pandemic levels. The upcoming anniversary sale will provide a unique assortment of product from the best brands, enhanced experiences based on customer feedback, targeted in-store and digital experiences, and a return of the print catalog. Optimizing the inventory mix for higher profitability is a priority, and the event has a strong impact on Q2 and the full year. Disciplined execution of operational priorities is delivering better customer experience and improved financial outcomes. Now speaking, Erik Nordstrom, Chief Executive Officer. Michael has been an integral part of the finance organization for 13 years, including his guidance of strategic initiatives during and after the pandemic. He is highly regarded as an outstanding finance executive and leader across the company. The speaker expresses gratitude for Michael's dedication to customers, employees, and shareholders, and wishes him the best in his next chapter. Now speaking, Michael Marr, Chief Accounting Officer. Nordstrom reported a loss per share of $1.27 in the first quarter of 2023, excluding charges from the wind down of Canadian operations. Adjusted earnings per share was 7 cents, compared to an adjusted loss per share of 6 cents in the prior year. Net sales and gross merchandise value decreased 12%, with a negative impact from the wind down of Canadian operations of 175 basis points. The most significant decline was in Nordstrom banner sales, which decreased 11%. Nordstrom Rack sales decreased 12%, with approximately 600 basis points of this decline attributable to the elimination of store fulfillment of Rack digital orders starting in the third quarter of 2022. Digital sales decreased 17%, including 800 basis point negative impact from eliminating store fulfillment of Rack digital orders and sunsetting Trunk Club earlier in 2022. Gross profit as a percentage of net sales increased 110 basis points, reflecting improved inventory productivity. Total SG&A expenses as a percentage of net sales increased 240 basis points in the Q1 due to deleverage from lower sales. Variable costs improved, partially offsetting the deleverage impact, marking the third consecutive quarter of at least 100 basis points of improvement in variable costs. The wind down of Canadian operations is on track, with all stores expected to be closed by the end of June. For the remainder of 2023, Nordstrom expects revenue to decline 4% to 6% versus 2022. With 2.5 percentage point negative impact from the wind down of Canadian operations and 1.3 percentage point positive impact from 53rd week in fiscal 2023. Year-over-year sales comparisons will be more difficult in the first half against stronger first half in 2022, with more favorable comparisons expected in the second half. Sequential improvements are expected in the second quarter and building into the second half, especially in the Rack as merchandise assortment continues to improve and new stores open. Adjusted EBIT margin expected to be 3.7% to 4.2%, decreasing slightly in the first half and increasing in the second half relative to 2022. Adjusted earnings per share for the full year is expected to be $1.80 to $2.20, excluding share repurchases, while GAAP earnings per share outlook is now $0.60 to $1. Priorities remain unchanged. First priority is investing in the business. Second priority reducing leverage below 2.5 times. Third priority returning cash to shareholders. Now speaking, Sarah Penner, Investor Relations Manager. The company has asked participants to limit themselves to one question and one follow-up during the Q&A session. This is to ensure that everyone has a chance to ask their questions and to provide a comprehensive overview of the quarter's performance. Piper Sandler analyst Ed Yruma inquired, what was the gross margin improvement in the U.S. excluding Canada? Pete Nordstrom replied, the designer business saw a significant run-up over the last few years due to an increase of customers at more entry price points. Despite this, it is still ahead of pre-pandemic levels and remains a large and robust part of our business. However, it has normalized since its peak in the last couple of years. Jefferies analyst Ashley Helgans inquired, can you provide us with any insight into the high-end consumer market and the promotional environment? Pete Nordstrom replied, our high-end customer base has been resilient despite the cautious market. We've been conservative in our sales and inventory plans, and after one quarter we have seen progress and momentum in that area. Our plans going forward look promising for continued improvement. Pete Nordstrom replied, inventory levels among our competitors are down year over year, which suggests a more normalized promotional environment. We anticipate that the price and promotion dynamics are now more predictable. We are prepared for any changes. Gordon Haskett Research Advisors analyst Chuck Grom inquired, can you provide an update on changes in basket composition or size since last quarter and give us more insight into any incremental trade down at the Rack since April? Eric Nordstrom replied, hey Chuck, this is Eric. We haven't observed any trade-down behavior in our business. Traffic has been fairly slow, however our spend per trip has increased. Last year's first quarter was atypical due to the amount of clearance sales, which has caused more regular price items to be sold this quarter, boosting the spend per trip. Gordon Haskett Research Advisors analyst Chuck Grom inquired, what changes are you making this year to help the business, such as bringing back the catalog? Pete Nordstrom replied, our strategy is to create anticipation around our new product releases and leverage the loyalty of our existing customer base. We do this by emphasizing communication with our customers, such as through a print catalog, and providing a compelling reason for them to purchase something new. This process has been successful for us in the past and we strive to continue iterating on learnings each year. Goldman Sachs analyst Brooke Roach inquired, can you provide more detail on the recent improvements seen at Nordstrom Rack? How much of an improvement was there sequentially at quarter end? What categories drove the growth? Was it new customers or higher spend among existing ones? Eric Nordstrom replied, thanks, Brooke. Our strategic brands have driven strong performance this quarter, with April being our best month. We remain focused on delivering great brands at great prices, which resonates with our customers. We're seeing positive results and traction across most categories. KeyBank Capital Markets analyst Ashley Owens inquired, has anything changed in terms of your planned approach due to the tighter buying you have identified this year? Pete Nordstrom replied, our strategy for sales is to give customers new and exciting products that they can't get anywhere else. We partner with a variety of brands to bring in something fresh and different from what they're used to, as well as the products they expect. This requires planning ahead. We start preparing for the next sale as soon as one ends, roughly 6 to 8 months in advance. J.P. Morgan Chase & Company analyst Matt Boss inquired, could you discuss the progression of sales throughout the quarter and explain the difference between active, casual, dressy and occasion wear? Additionally, could you elaborate on the inventory productivity initiatives that drove gross margin in Q1 and how long do you anticipate them lasting for the rest of the year? Michael Marr replied, in terms of our quarterly sales cadence, we saw a consistent trend, starting with a good February, followed by softer sales in March across both banners. April was our best month and May has seen continued sequential improvement across both banners, particularly at Rack. There was no significant difference between category mix during this time period. Regarding gross margins, we started the quarter with cleaner and more current inventories than last year. We are managing with conservative sales plans, including using reserves to hold back some buying until closer to season. We also have a target to increase turns by 10%. This leaner inventory level with less markdowns has helped improve margins and productivity. Year-over-year comparison should see the most opportunity for improvement in the second half of the year since last year's elevated markdown levels. Telsey Advisory Group analyst Dana Telsey inquired, what progress have you made with increasing the penetration of strategic brands at Rack and how has that impacted margins? How is the performance of your private brands expanding, and what effect is that having on margins? Eric Nordstrom replied, hi, Dana. We're still in the early stages of our strategic brands initiative. It's a way to drive profitable sales and higher sell-through at regular price, which leads to higher margins. We need to remain agile so we can capitalize on opportunities as they arise. Our Rack business is where we expect to see the most impact from this initiative since we can be more opportunistic and aggressive to get the brands that are resonating with customers. We anticipate continued sequential improvement in Rack performance throughout the year. Pete Nordstrom replied, yes, with regard to private brands, our performance was poor in 21 and 22. We took corrective action by cleaning up non-performing inventory by the end of 22. Lead times are longer for private brands due to design, production and importation phases. In our Rack division, private brands were the #1 volume brand. Initial signs of improvement have emerged in the Nordstrom banner with the introduction of new products. We anticipate ongoing improvement throughout 23 and 24 with sizable growth from private brands. Morgan Stanley analyst Alex Stratton inquired, can you provide examples of the successful supply chain initiatives and how you're thinking about them going forward? What is driving your more conservative outlook for the rest of the year in terms of profitability, such as gross margin and SG&A? Michael Marr replied, in response to the question about supply chain, I can provide some examples of our improvements. We've made significant progress in terms of optimizing unit flow, increasing velocity and throughput, and improving click-to-delivery speed. These efforts have resulted in a 20% increase in throughput and over 40% improvement in delivery time. We anticipate there will be more opportunities for improvement even as we begin lapping prior year's progress. With regards to guidance for the year, the first quarter performance was encouraging, but it's still early days and remains an uncertain environment. BMO Capital Markets analyst Simeon Siegel inquired, what percentage of increased penetration of strategic brands at Rack came from Rack-specific buys? Could you explain the difference between GMV and revenues? Eric Nordstrom replied, we've seen a healthy demand for our Rack merchandise this quarter, which is mostly attributed to our team's focus on key brands and our ability to quickly respond to changes in consumer behavior. Our inventory position enabled us to take advantage of market opportunities that we would not have been able to capitalize on otherwise. Michael Marr replied, yes, Simeon. This is Michael. GMV is slightly below sales performance due to concession-type models in the designer category. This means that only commission revenue will show up in sales, whereas the totality of volume will show up in GMV. Therefore, if designer has softened recently, this will be reflected in the sales versus GMV dynamic. Bank of America Merrill Lynch analyst Lorraine Hutchinson inquired, can you tell us what your plans are for improving full-line sales this year, excluding anniversary sales in the Canadian exit? Michael Marr replied, we expect sequential improvement in our Nordstrom business. There are some timing shifts between Q2 and Q3, which will impact us, but overall we anticipate improvement due to easier comparisons from last year, as well as addressing excess inventories. Eric Nordstrom replied, Nordstrom stores continue to recover from the pandemic, with recovery varying geographically based on more urban stores. We're also continuing to look for ways to bring more selection to customers through alternative inventory models and dropship. Additionally, we are investing in our omni-channel capabilities to increase sales and engagement. This includes features such as convenient returns, alteration services, and buy online pickup and store capabilities. Our customers have responded positively to these offerings, and we're continuing to see opportunities for improvements. Pete Nordstrom replied, "I'd like to highlight the important role that customer service plays in our business. We have seen firsthand in our stores across the country that employees are taking ownership and accountability for their customers and providing excellent service. This dedication is paying off with increased customer satisfaction, which has been reflected in our business results." JJK Research Associates analyst Janet Kloppenberg inquired, "What progress have you made in brand content improvement on the rack and designer matrix at full-line stores? What is your timeline for achieving the right mix of designers and clearing problematic products?" Pete Nordstrom replied, "This is Pete. Our journey to transform rack has been underway and we're seeing positive signs. We are investing in this strategy and will continue to report our progress each quarter. Designer remains an important part of our offer, and we have strong partnerships with the biggest brands. We need to clean up unproductive inventory this year, but we remain confident that designer will be a key component of our mix going forward." Sarah Penner replied, "Thank you for joining us today. We are delighted to have you with us, and a replay of the call, alongside the slide presentation and prepared remarks, will be available on our website for the next year. We appreciate your interest in Nordstrom."